Good morning, guys. Brian's here. Today is Monday, December 11th, 2023. The market has not yet opened yet. This is the weekly gamma exposure video for preparing for the upcoming week. Always, I like to start with the previous week because that's how we learn how to use any types of tools. I've been doing this for almost about a year now in terms of prepping for the week this way, using gamma exposure levels to come up with some sort of an idea or framework or blueprint, as I like to call it, for the upcoming week. So this right here are the levels from last week, and this is what was shared on the previous video, which I've done. If you're now new to the channel or you're new to this gamma exposure type of analysis for the upcoming week, I would first recommend you guys check out this how I prep for the week using the gamma exposure levels. I've been doing this all year long, but I only just recently started really making it more public on YouTube and showing you guys more of my step-by-step method, whereas before I just used to include it in some of the various videos, especially when I used to do the recaps early in spring of 2023 here. But for the most part, this video will help answer any types of questions in case you don't understand what I'm talking about in this video, as I'm not going to be explaining every single thing about gamma exposure. On top of that, I would recommend you guys check out this video as I released this yesterday. This is just an overall technical analysis review on the SPX, as these two videos will help with your understanding of this week. I feel inclined to also reiterate that this week has a lot of catalysts on the calendar that was mentioned in the previous video for preparation for this week. So we have CPI, we have the FOMC, we have a PPI report, we have retail, unemployment, we also have the PMI. This is not, to my understanding, an FOMC announcement, but it is an FOMC press conference, so anything is likely to happen. The markets will be looking for what sort of forward guidance the Feds are going to be addressing, as everyone is trying to gain some sort of indication as to what's going to happen in the future. But as you guys know, there's no way to predict what's going to happen in the future. So as we come back to the chart right here, this is the levels from last week. These purple levels, as you guys know, at this point, I've just been saying over and over again, they're high liquidity zones. Keep it simple as that. Don't, unless you're trying to write a thesis paper on gamma exposure, don't make it complicated for yourself. These purple strikes right here, they're purple just because I decided to make them purple, but you can make them whatever color. Just know that they represent the absolute gamma strikes right here. AG3 is the strike price last week at the start of the week, just as we're going to do this video together for this upcoming week here. So these are the previous levels, just pointing it out. The reason they have high liquidity, as they are the absolute gamma strikes, tends to have a lot of high liquidity, and around high liquidity strike prices, price tends to be choppy, as well as it also tends to act as some sort of a magnet. And what do we have here? Another week in a row. At this point, I'm starting to sound like a broken record. Purple strikes, I've been saying this all year long, especially if you've been in a quant trading app. Max Pain, absolute gamma strike, XYZ, high gamma exposure strikes tend to act as magnets. They tend to act as high liquidity zones. And this is just another iteration of this. I've been mentioning this a lot early in the year, and I don't think it wasn't until I started sharing these types of videos and showcasing it to people that they started clicking or started understanding. Because despite sharing these types of things throughout the year, whenever I've had one-on-one sessions with traders, you guys still didn't understand. So I'm happy to hear that you guys are now starting to really understand, and it's starting to sink in, largely due to these videos and actually being able to have the visual representation of your charts. This blue area right here is where there was the highest amount of open interest collectively, so I call it the open interest heat map here, and it also tends to act as some sort of a magnet for price, as it will be hard for price to move past it, and if price was to get lower, it would probably return to it, confirming if we were to continue selling off. So this is our open interest heat map. These are our high gamma strikes. This is our highest negative gamma strike. This is our highest positive gamma strike. During a positive gamma environment, or I guess a more accurate way of saying it is an overall net positive gamma environment, price will tend to head towards the high P1 strike. So this is the strike price that had the highest positive gamma, and then the same works in reverse. Let's just say the overall market was in a net negative gamma state, then the market will likely try to head towards the N1 strike. So this is the strike with the highest amount of negative gamma. The G flip is known as the gamma flip strike. So that's just the strike price in which if the SPY was to get below this level, then the overall net gamma turns negative for the SPY. I'm just mentioning what these levels are because, again, once we get into mapping out this week, I'm not going to be explaining it again. And for some of you, this might be your first time seeing any video like this. Gamma flip, think of it as a supercharged support and resistance level. Another way to think about it is imagine as if this level is the level of the ocean here. And imagine if price action is, in a sense, threading water to stay above the ocean. This is natural for it. The market wants to breathe. It breathes above this level. This is natural for the markets to be above the G flip strike. If it is below the G flip strike, then it is, in a sense, drowning. It does not want to remain below here, and it won't stay below here for that long. It might be at the longest period during a bear market, maybe 3 weeks or so, but inevitably it will end up just catapulting itself right back on top of it as it gasps for air. So think of it as a meter, barometer, however you want to use whatever analogy that works for you. But instead of trying to have this profound understanding, just understand and think of it as a very strong potential support and resistance level. Also going to be a high liquidity strike, especially when there's a lot of open interest there. HOI just stands for high open interest collectively between calls and puts. And this was the #1 absolute gamma strike right here. So this 455 was our dominant strike for last week. And we can see how price traded around it. Another week in which we ended up chopping around this level multiple times as we had multiple touches. And then inevitably, you guys see what ended up happening towards the end of the week. So that was a little bit of our recap to last week. If we were to take a look at what the gamma exposure profile looked like, this is what was shared here on the YouTube video in which I mentioned at the start of this video. So this video right here, in which we were talking about preparing for the week of the 4th to the 8th, this was the report in which we were created. These were the expirations right here. You guys can see this is our absolute gamma strike, 455. This is our gamma flip strike right here. This is letting us know this is our high open interest. This blue section right here were the high open interest strikes. So it's just taking this information, taking this data and plotting it on our charts, because as a technical analysis type of trader, I'm pretty sure a lot of you guys can relate. We like to look at our charts more than anything. I don't really want to have to look to too much data when I'm trying to make my trading decision. I'd rather do the analysis and then just revert back to price action analysis, looking at candlesticks, looking at the volume, trying to get a gauge for some sort of technical patterns and stuff like that. Because at the end of the day, that is our visual language. That is the communication that we use to relay information to other types of traders. If we say, hey, the market is going up, we're not referring to anything advanced in the gamma exposure or the option exchange. We're referring to price. So I'd much rather just look at price action once trading actually happens. Moving right along now, let's jump right ahead and take a look at the upcoming data. So this is all expirations for the SPY. So the first thing I like to do is just take a look to see if that coincides with our weekly approach, because what we're going to do next is just separate this week from all the other weeks and run the report again. So we're going to start again with this. Just taking a look, we have a lot of call premium still. This has been explained before, but this is just letting us know the market has gone, we know it's rallied. We can just take a look at the chart on the daily time frame. These numbers tend to be a little bit more balanced. In this case here, there's a lot more call premium than there's put premium. I interpret that as the market has gone really far, and there are a lot of calls that have gone in the money that were originally sold, and they were not intended to go so far in the money. On top of that, we know that there is the quarterly expiration that's coming up, and this is a big weekly expiration here, because we can see this right here. This 20% is letting us know this is how much gamma exposure there is. If we take a look at the 29th, this is actually the quarterlies, and then we see the next one is this monthly right here on the January 19th. So we have this week, which is a monthly, another monthly, and then we have the quarterly here. These would be the 3 dominant expirations. So I'm assuming that a lot of the call open interest, that a lot of the calls that have gone in the money probably or likely due to these expirations. So we can isolate that. I'll save that for another video, or for you guys in QTA, you guys already know what to do. Just select this one, submit it, and then you'll get a report to see if this is the expiration that has all of the calls that have gone in the money, because it means once this expiration is in the thing of the past, then we'll see some of these numbers reset here, because those calls will no longer be in the options chain, so they'll no longer affect the calculations. As we move down, we see that the absolute gamma strike is 460, ton of liquidity. This is the current spot price right now, as is highlighted in the this yellowish color here in the background. We can see that this is the last traded price here. The last quote for the SPY is 460.01, so that's pretty much saying that this is the at the money strike. So it's no surprising that this is the absolute gamma strike. It is also the strike that has the highest amount of call open interest collectively. You guys can see that there is still some call speculation that is occurring a little bit higher. So if you're a bull, that's generally something you'll want to see. As we scroll down now, we take a look. This is pretty significant here. Let's just turn off the net GEX and take a look at just the absolute gamma. There's a lot more absolute gamma to the downside, however. So this is usually whenever I'm trying to form some sort of a slight bias here, I will say that, hey, it's, it's pretty difficult right now with this current statement to think that the SPY is going to want to hold above 460. However, this has looked like this for a few weeks now. We've known how price action has been. It has gotten up to 460, and that level has rejected a bit. However, Friday was the first time we actually closed above that 460 strike. So things change. Nothing's going to stay like this forever. Just because we see all of the absolute gamma, or majority of the absolute gamma, to the left hand side of the current spot price, it doesn't mean we won't have a week in which price actually breaks out, because it's not always going to work out that way. But I'm going to take note of this and say, hey, I'm not really looking to be extremely bullish this week unless I see some sort of change here, or obviously price action dictates something else is happening. As we move right along now, let's just jump down to this week. So in order to do that, again, I would just uncheck this, and then I would just check the expirations in which I'm interested in, and I'll press submit. But in this case here, I'm going to leave this page open with all of the expirations selected in case we need to come back to it. As we jump now to just this week, ran the report, submit, and this is what we get. We start with this top-down approach. Here we have over $26 million in call premium versus the put premium for this week alone. That is a huge imbalance. And as we move right along, we still have the same absolute gamma strike as 460. So this is letting us know also for this expiration, it's a pretty dominant strike price. As we can see, here's the 460. We have the absolute gamma. We also have the highest positive gamma right here. And then we have, this is our open interest heat map. You guys can see it's a little bit wider here, but this is the area that will have a lot of liquidity here. This is where the negative gamma exposure is clumped up in this region. And then there's a lot of call or positive gamma exposure clumped up in this region. So we're going to plot some of these on the charts. I'm just starting with a large overview right now. Let's turn on our absolute GEX. I'm recording this video at 7:20 or so a.m. Eastern time here. So if you're reviewing this video and you're curious as to when this gamma exposure report was created, you guys can see right here, it was 7:09. That's when this was created. And then again, I don't really update my levels throughout the week pertaining the gamma exposure playlist like this, because the quant trading app script that we use, it naturally includes the weekly expiration. So in case, again, you are new to a quant trading app or anything like this, the levels will be created and then added right here. So at 8:30 Eastern time, the intraday script is going to automatically calculate all that, and it's going to put any changes in the gamma exposure right here. So we already have the weekly levels created. The intraday levels, again, will do that automatically, and that's the main reason. That and also time are the main reasons why I don't bother to do this every single day of the week or multiple times throughout the week. I like to do it at the start of the week, and then I have my blueprint, as I mentioned earlier. So one last look at how last week played out, as we can gain some sort of insight as to what we can expect for this week. And again, this is nothing new. This is the previous week here. You guys can see at the start of the week, this is what it looked like. And that week, the market ended up holding above the positive gamma strike, and we went towards where the positive gamma rolled off. And then we can just go right along. Again, if you guys have been watching the YouTube videos that I've been releasing on this type of stuff, none of this should be any type of surprise to you. It's been the same thing almost essentially all year long. So let's clear our chart and let's get started. Just going to remove all these drawings here, and boom, nice clean chart. Let's get started here. So what do we have? First and foremost, I like to start with the absolute gamma strike. So we have 460. So I'm just going to come right here and let's just draw out that 460. You guys know if it's absolute gamma, I make it the purple, make it nice and solid. It is the strike price that I'm most interested in. And then just make sure to put in 460 right here. Label it as the AG strike, and let's put this on to show on the right. Boom. So now let's see what is the second highest absolute gamma strike. So let's turn off these right here. Again, there's other ways to view this information. You can sort it by this here, and there's multiple ways to view it. I just like to come down to look at this graph right here. See this little bit of a pop right here. So this is our 458. Another strike in which we know from memory, if you've been trading for the month of November, you also, at this point, you should be able to just know the levels that have been pretty significant. But for demonstration and to show other traders, I guess it helps to have it out on the chart, and also helps to be able to recall it in the future. If it's the AG2 strike, it's the second highest absolute gamma strike. I don't want it to be as significant, so that's why I just bump it down. I guess I'll keep the width, but I just change the visual representation because I want this to be the one that is the primary focus for me. And then we have, this is the AG3 strike, which is 459. I probably, I'll draw in this video, but when things are this close together, to me, it becomes, it's not as relevant. I don't like to have too many things next to each other. The less is more on my chart works for me, as again, I don't want anything to distract too much from actually just reading and seeing the price action, but I'll just put those three there. So it's they're all clumped up here together. So that's something that's interesting. Another thing to take note of is the fact that this is a week in which, again, there are a lot of catalysts. So any one of these things can trigger the market to make a large move, and then it renders all these levels almost practically useless or pointless. All they'll end up telling us is, hey, before the catalyst, this is what the market, in a sense, was expecting. But for the most part, I'm expecting all of these levels to get blown past this week. So I'm going to take it with a grain of salt. I'm just plotting on the level and just wanting to do the video for any of you guys here on YouTube as you're trying to come up with a framework for the week. Next, let's plot our P1 strike. So we have 462, and 58 is our N1 strike. So 462. Let's just also draw this. And also the reason is because it's forward looking. That's why I always have my lines just extending towards the right. I don't really care about what's happened, in the past here. In this case, I can just look at my chart. I already know on the daily time frame, this has been the most recent pivot on the daily. If we were to come here, This level is here, and at the same time, the all-time highs, these pivots here, I'm well aware of them. You can just look at your chart. In my opinion, I like to just look at forward looking, and that's most of the reasons why I like drawing my levels from the options chain, because the options market is pricing in, it's more forward looking than anything. It doesn't really matter in this case here when we're looking at the options chain. The options market is not looking 6 months ago. It's not looking at a year ago to determine what's the price of 460 for this week. What did I do here? I'm not that great at multitasking, so let me stay on task here. If anything I just said makes no sense, it's because I'm multitasking in this aspect and I need to make sure I focus. But at the same time, I want to make sure that the video is not super dry for you guys, so I'm trying to commentate real time what I'm doing. So in this case here, this is the AG2, but it is also the N1 strike. So I will bump this back up to make it solid, because it is no longer just an absolute gamma strike. It is also a negative, the high negative gamma strike here. If this is not an AG strike, I would probably make it red. In this case here, I'm actually, I'm going to make it red. I'm going to say it's the N1 strike and then it's the AG2 strike. I want to make sure I understand where the negative gamma strike is at all times. So there we go. So it's also AG2, but first and foremost, it is the N1 strike. If it was the absolute gamma strike, then I would have made it purple, because that is the first and foremost thing I like to be aware of and pay attention to. Now we have this as the highest call open interest, so we're just going to call that the COI. That's 460. Let's put that right here. That is COI, high call open interest. And then we have 450. Look at that. That's pretty solid strike price right here. It has the highest open interest collectively. It is also the highest put open interest, and that is a pretty strong negative gamma strike down there at 450. So let's just duplicate this and then edit it. Just put in 450 so we get it exact. And in this case here, it was the highest put open interest. It was also the highest open interest overall. And then what else was it? If we were to count how strong it was in terms of its negative GEX, we have, this is number 1, this is number 2, this is number 3, and this is number 4. So in this case, I guess I'll just put that on here as it is the P4. And let's put this towards the beginning. P4. And that's just letting me know it was the highest, it was the 4th highest negative, sorry, not P4, N4. There we go. 4th highest negative gamma is all the way down there. In terms of a drop for the markets, that is only a negative 2.18% drop from the current spot price. So that is well within reach for a week like this. Definitely possible. Usually, let's just say it was 440. I probably wouldn't even be bothered to mark that on my chart, because we're starting to enter past 2 sigma territory, and I'm not really that interested generally in putting targets on price action that is outside the normal, range for the SPX in terms of, 80% of occurrences happen to be less than a certain amount. So I'm not really going to shoot for something that's that far out. But for the most part, this is well within reach here, especially on such a catalyst heavy week. Let's make sure we put that this is our P1 strike. Let's make sure we have that labeled. And there we go. Moving right along, what other information can we discern from this chart? We have the G flip, so that's 457. The other thing to take note of is the gamma flip level. It is more so an area than in a specific strike price. Almost like most of these are, I guess, for that matter. But more the G flip more than anything, because this thing is changing, throughout the week, and as expirations roll off, the overall gamma flip level is calculated for the entire options chain, and as they all work that way. But the gamma flip, again, if we want to know where the overall market enters a net negative gamma level, then this can rise and fall with the tide. And the understanding is that the market wants to remain above this, so it's going to act as some sort of a potential support resistance level. And then if we get below it, then we start looking at some of the high negative gamma strikes, because that's probably going to act as the market is going to be attracted to them. So these levels everything's kind of clumped up in this region here. It's no surprise. Also, look at the previous price action, so that kind of makes sense. Let's also plot our OI heat map. So I don't like to draw really large boxes or rectangles on my chart, but in this case here, I think this is a moment in which we have to. I would prefer not, but I'm going to here. So from 455 to 460, let's put that on the chart here, 455. So down here up to 460. Let's also make sure I extend this out to the end of this week here. And I want to keep it consistent. My color is consistent. The blue for me is usually representation of the open interest, just lowering the opacity. So that's actually still a little too much. I want it to be a little bit more transparent again, so it's not too distracting. So let's go with, I think I usually go with around 80% or so. All right, so there we go. So now I have the open interest heat map. In other words, if the SPY was to be below here, then I know what this stands for, what this means. And at the same time, let's see where we have this is the negative GEX tends to really roll off right here. So this, I'm just going to call this like a cliff, because in this case, this is where it just drops and then it really picks back up again. And then this is in a sense the last level where it's pretty flat below here. So again, a little bit more of a complicated week. We've been dealing with some very clean gamma exposure weeks. So this is where it's discretionary in this, how I want to label it. It just comes down to how many levels you want to put on your chart. I screenshot this and I save this so I can always come back and reference it as the week progresses. So it's not like I'm going to miss anything in this case here. It just comes down to how much information, again, do I want on my chart. So I can see we have this here. So before we get to some of the other levels, let's just take a look at the ones that are easy to spot. So this is our P1 strike, as we marked in our chart, is 462. This is our P2 strike, so 465. So I want that to also be on my chart. So let's drag that right up here. And we have 465. This is going to be our P2 strike, the second highest positive gamma exposure strike. There we go on the chart. What do we have next? This is our P3 460. Might as well put that here so we know we already have the level. And let's just put P3. Boom. Moving right along. This is our N1 strike. This is our N2 strike, so 459. So let's also that's pretty interesting that there's so much negative gamma strikes pretty close to the spot price. So P2, why do I keep putting P2? We've been in such a positive environment state. I keep thinking the P's, the positives, because the market has just been trending up. All right, so -1, -2, -3 right here, 57 right here. Let's cancel out this one, edit. Let's go to G flip. This also happens to be our N3. So all these levels right here, negative gamma, negative gamma, negative gamma. Spot price is right here. That's a little, if price gets below here, we're already in a slippery slope, because then we're below all this negative gamma, and then all this will probably act as some sort of supply zone for the SPY this week. Again, in price action. In this case, if you saw the previous video in which I showcased when we were looking at the other tools, such as something like the volume profile. Turn this on the weekly aggregate. You guys saw how last week ended up playing out. We had the market sold off here on the Wednesday. We were below all of this potential supply. We were also coming close to the highest negative gamma strike. And then the next day, boom, the market gaps up. And now all of that potential supply ended up acting as a demand, and price ended up going higher. So the same thing to take into consideration for a week like this. If we know all this, that means all this is negative gamma, negative gamma, negative gamma. Imagine the SPY gaps down and we open probably right here. If the CPI report on Tuesday or one of the pre-market reports causes a gap down, market will likely open right around here. It'll be choppy around here pre-market, and then we'll be below here. This is letting us know that, hey, at the start of this week, all this is negative gamma. We're now below all of that negative gamma. All this is probably going to act as resistance levels. It's going to be hard for the price to get back above these levels. However, if price was to gap back above them, or it just naturally trended higher than them throughout the day and it's holding these levels, then we shift our eyes to say, hey, we're back above the G flip strike. We've cleared out all of these levels below. Now we're holding. If we can get above, now we're holding above here. If we can get above the absolute gamma strike, it's only natural that price will want to head towards where? Our P1 strike, because now we're back in a net positive gamma environment. P1 strike is our highest positive gamma strike. So now we have a target of 462. If price is holding above 462, then the expectation would be, hey, maybe we're going to try and make an attempt at the P2 strike. So that's how having these levels can help. The same thing, if we're below these levels and then we see price action then gets below all this high open interest levels, then we have our target of 450 because it makes sense. It's going to want to head towards the high negative gamma strikes. We saw already that this is a lot of put open interest and there's a lot of open interest collectively down here. So we would expect this to be some sort of support. If this level cannot hold and price is now below here, then we start setting our sights on what other structural levels do we have below. In this case here, we can see that 450, 445 is a pretty strong strike price. There is some positive gamma here. These calls are so deep in the money that they are actually outweighing the gamma exposure for the puts. So this is pretty unique here. We can expect this to definitely be some sort of support. So I'm just going to put that on my chart. I generally would not put things that far, but only because I am expecting anything can happen on a week like this. So I'm putting a little bit extra levels than I normally would. And let's just say this, let's make it green here so we know that it is coming from positive gamma. And then I'm going to call it a positive island. So positive island. And that to me just indicates I will know in the future here. Let me just, I don't want to make this, I guess we can keep it a solid, but I'll just want to decrease the size. So this is just letting me know that this is an island. It's a spot where there is positive gamma surrounded by a bunch of negative gamma. So it is an island because it is in isolation and is surrounded by both sides by negative gamma exposure, and it is a positive GEX island for me. That's something that is pretty self-explanatory in my opinion, and I like to come up with simplified analogies or just simple explanations to something that can be complicated. The simpler we make it, the easier it is. Now, the simpler it is we make it for ourselves to remember, then the easier it will be when we're actually trying to make these trading decisions. Let's mark also that this strike price has a lot of open interest, which we did, I believe. So we have HOI. I wouldn't do this also, but I want to make sure this stands out. So I'm just going to put a little bit of a blue box around this region here to really call that out, remember, in case the market ends up trading and then I forget that this was also the high open interest strike. I want to make sure it stands out because it's not a whole area. It is really just the strike price. There is a lot of open interest here also, relatively speaking. In the past, for this week, it's not a lot of open interest. So 449, I guess in this case here, I'm going to just drop it down so that way I have it more like this, just giving it a little bit more tilt towards this 449 because there's less open interest at the 451 level. Now let's see if we can mark our roll-off levels. So in this case here, the negative GEX really drops off above here, but to me that's really high. Again, I don't like having levels that are that far away. This is already a little bit longer than I would have wanted to be doing this, but let's add it anyway, mostly because of all the catalysts on this week. We want to, in a sense, expect the unexpected, be prepared for anything, and I don't think this is an instance where having too much on our chart is going to hurt us. I'm just getting a little anal about these. I'm going to line these up a little bit better as soon as I'm done recording, but this 470 strike, let's just put 470, and what do we have on this chart here? We can just say positive GEX drops. In this case here, it's not rolling off, in my opinion, it just drops. So I'm just going to put positive GEX drop off instead of a roll off, and it's pretty much flat past this here. Even though these levels can grow and will change, I don't want this to be as significant, so I'm just going to make it dashed in this case here. And then let's also take a look at below 457. We have this drop here. So 457, I'm going to put that here. Negative GEX, let's make it all lowercase, drop, right? Because it's not really rolling off. Again, I came up with all this, and I give it these weird names, and a lot of you guys have been asking questions. What's a roll off and what's this? It's whenever I look at visually, when I look at the chart, if I see this is a roll off to me, it's rolling off. This is just a drop, in my opinion. However, it's significant that it stands out here after a roll off, it drops. So that's why it stands out, and I have to mark this on my chart. I don't want to ignore this. As much as I would not like to have a level this far out, I have to include this again because price is rolling off, but then we have this big big stagnant price here, and then it drops, and then it just continues the roll off. So I don't want to have a million things labeled on my chart, but knowing that this drops off and I didn't put roll off is letting me know that it pretty much rolls off before it gets here. The same thing in this case here. This is where it drops, but because it drops, I know that it's not rolling off gradually. Usually when it rolls off gradually, that's where things dissipate and price action doesn't really go much higher. The fact that it just drops means if we can get past these humps, these three big humps right here and prices below here, we can gain momentum to the downside. So that's the difference for me. This is something just in my head this year, just made sense, and I've been going with it, that approach. If you have something that works better for you, then by all means come up with something different. I'm just demonstrating what works for me and my own visual communication. And so let's put that 457. That's the negative GEX drop. Then we have this spike here, as we already have indicated on our chart. I would put that 449 in a sense is really, it's different from past weeks. I'm aware of that, but we have to adjust with the context of this week in front of us. So I'm going to put this here, 449. I'm actually going to put this as where the negative GEX rolls off. Is it perfect? No. Is there another place that we can probably put as a better place for the roll off? Probably. But in this case, I know for me this works, and I'm just going to usually, downgrade this to something that's like that. Negative GEX roll off, 449. It's also understanding the dynamic that these gamma exposure levels will adjust a little bit as the week progresses and price action moves closer and closer to these strike prices. I know if the spot price was to get closer and closer to 460, that negative gamma is going to grow. This N4 has the potential in a week like this to become the highest negative gamma strike. So that's why I'm definitely making sure that's marked on my chart. So purposes of this video, I'm over the 30-minute mark. I'm just coming up on the 30-minute mark. I do want to cut it here because I think there's enough information in this video. It's almost 8 a.m. I want to make sure to get this video uploaded to YouTube, and I can release it later, as it'll take a couple hours for YouTube to process it, as I'm recording it in almost 4K. So it takes a few hours by the time I can actually share it with you guys, and I want this information in you guys' hands as soon as possible, even though at least for today there isn't a lot on the calendars. So that will help. This is more so to help, I guess, you prepare you guys for Tuesday onto Friday. So I'm just glancing at this one last time, make sure I didn't really miss anything that major here. I'm pretty sure there's probably a couple things in which I would have missed, as I'm doing this in real time. In the future, I'll do these before I record the video, and then I'll just point out the levels and we'll just cross-reference them together. I'll just be like, hey, I drew this level because I saw this, and then I'll be like, hey, I saw this here, so that's why I drew this level. And then the goal is to get these videos to be around the 15-20 minute tops versus the 30-35 and a half minute length of these videos. Hope you enjoyed this, and I really hope this helps you guys with your trading this week. Again, one last note, I highly recommend you guys check out this one first, as it is already live yesterday. And then if anything in this video you want some sort of a reiteration as to the methodology, I would check out this one, as I went a little bit more step by step. But I guess I ended up going step by step in this video too. This will probably be the last time in which I go this step by step. Thanks for watching, guys. Leave a comment if you enjoyed. I look forward to hearing from you. And if you're curious as to anything, the levels are generated from Quant Trading app. That's where we're getting this here from. I am the lead developer for Quant Trading app, just to let you guys know. So that's how I'm able to use this platform here to come up with these levels. And again, thanks for watching, and I'll catch you in the next one. Take care.